Welcome to The Growth Engine, the podcast where we dive into the mechanics of top-tier marketing strategies with the experts who make it happen. Today, I'm delighted to have Filippo Stefanelli, a dynamo in financial services marketing, with an illustrious 15-year journey and an INSEAD Executive MBA in his arsenal. Filippo is the maestro behind transformative B2C campaigns that have not only won markets, but also hearts and minds. With a track record of spearheading innovative initiatives, he's the force behind multi-million-dollar campaigns and has been instrumental in amplifying assets under management by over $1 billion. As a chief marketing officer who has honed the art of brand storytelling and product UX, Filippo embodies the innovative spirit and robust leadership that our listeners aspire to. Filippo, thank you so much for joining us today.
Thank you so much. My pleasure.
Thank you. To kick us off, Filippo, can you tell us about your background? And I'm intrigued really because I know that you're a former agency owner yourself.
Yeah, so I started on the other side of the table. I started as an agency co-founder, an entrepreneur in my hometown back in Italy back then.
Right.
And I did that for more or less 12 years. And we started as completely bootstrapped agency, so just the two co-founders, and we grew quite organically from there. So entirely bootstrapped.
Wow.
From the first day, and I started to acquire and also win quite significant accounts.
Were you working in financial
No,
services?
back then, think about the most important Italian industry. Think about food, fashion, wine, entertainment. We had quite good account in all of them.
Okay.
And we were winning against the big guys, the listed non-independent agents.
Yes, yeah.
And I did that for 12 years. And at some point I felt I wanted to go out of Italy, I wanted to go abroad.
Okay.
So I sold my equity. I entered into the INSEAD Executive MBA and I started to travel as an INSEAD student.
Okay.
One of their campuses is in Singapore. And so I went there with my wife. We fell in love with this country and what it represents. And from there I started to network to find a job there. And so I changed industry, function, continent, all at the same time while I was still a student.
Right.
And I entered into a WealthTech company post Series A as a chief marketing officer with a very small team that grew very fast in the subsequent 5 years.
Right.
And with a company that went from a few dozens of millions of asset under management to more than $1 billion US in the matter of 4 years.
Wow.
So
phenomenal growth.
Yeah, we grew up, the classic rocket ship backed by VC that you read on the books and then you are part of it.
Yes,
so it was a fantastic experience. We did that for 4 years and a half. We did that from Series A to Series D. And across COVID, across scaling financial products in the Southeast Asian market. So ranging from Singapore to also Malaysia, Thailand, Hong Kong. And also we went also in the Middle East with Dubai.
Right.
So we scaled this very fast across 5 markets and many different type of products. So what the industry tends to call as a robo-advisor, it is a word we don't like to use.
Yeah.
But that's probably the word, the label that was given to us.
Okay.
And we don't like because there are not so many robots doing the decision.
No, of course. But what was it about when you were over in Singapore? So obviously your experience in agency life before then was nothing to do with.
So in fact, the first thing I did was to end all the contract with agency
right.
as soon as I became the CMO of Stashway in Singapore. But jokes apart, I think the agency experience gives you an incredible customer centricity.
Yeah.
Because the only way to bring home your account is to really understand what your customer needs. So this is something that is in my DNA. And I think for me, it's been a sort of a superpower because honestly, it's not something I see happening often.
No, and I guess the other bit I'm intrigued about is at Stashway that you were developing products. A lot of products it
Yes.
evolved. So when you first came in there, you went through enormous growth. So I'm interested to know I guess both at Stashway, but also at Moneyfarm now.
Yes, because after Singapore, just to conclude the story, then we decided with my wife, because our kid was delivered in Singapore, and we say, okay, you know what, let's be closer to the grandparents.
Yes.
And also, we felt a bit of we were missing home.
Right.
So we come back, and then I found another WealthTech player that was in a different position, already a Series D player called Moneyfarm.
Yeah.
But also they had a similar need, a need to scale up a single product to a multi-product offering.
Yeah.
And so this is what I'm doing right now as a CMO in Moneyfarm.
What would you say is the link there between the work that you do as CMO in marketing the business and acquiring customers and clients and growing the business from that side, but what's the involvement that you have as CMO in also in shaping and developing the product roadmap that you're suggesting to the business?
Yeah, that was very clear in Singapore, where we felt at some point that the banks were playing some not very, they didn't have a very clear proposition when it comes to a certain type of products, in which in order for the customer to have attractive yield, he had to go through many hoops. There were many asterisks with a very fine print of things you need to satisfy in order to reach the advertised rates of some financial products. And so that was a case in which marketing, but also product were very aligned to say, there is an opportunity here. There is an opportunity to do something incredibly simple, incredibly transparent, with no asterisks, compliance-wise. I mean, there are some asterisks.
Of course, yeah.
Compliance has already vetted my speech. And so we created this product. We call it Simple. And it was the most successful product of this company because it was super carefully positioned to own this niche of I don't want to think about all the fine print. I just get what I see. And I get it in a very transparent way, delivered with a top-notch app experience that usually a bank cannot match due to legacy requirements.
So is that essentially kind of cutting through the red tape for the consumer and just making their life simpler? Is that what we're saying?
In a way, yes. It is also the unbundling of the bank, and it's you try to move faster before the bank will arrive there. Because at some point they will arrive for sure.
And that experience that you had in Singapore, that's you're starting to take that over into Moneyfarm, and can you link the two there?
Yes and no. There is a different product maturity. Southeast Asia is a very fragmented market. UK and Italy, the two markets in which Moneyfarm operates, are different. The regulatory environment is different. Overall financial literacy is completely different. It is completely different between UK and Italy. But if I compare with Southeast Asia, it's a different world.
Can you expand on that a little?
Yes.
I think that you've got a really unique perspective, and it would be interesting to understand more about what you mean about the different levels of financial literacy between the markets.
Yes. So I mean, Southeast Asia, Singapore is a very advanced country. GDP per capita probably is the top 5 in the world, maybe it's the second or third one. And then maybe you go into Malaysia, in which you have a completely different set of regulation, a completely different approach to money. And then you go to Hong Kong, when there is a component of luck, there is a component of betting, So every country has a completely different relationship with money. And so the financial literacy is a direct reflection of that. But also between Italy and the UK, in general, there are some of our values as Moneyfarm that we have to stress out much better in Italy compared to the UK, because in the UK they are taken for granted. In Italy, no. So the fact around independence, about cost transparency, in UK is like a given. In Italy is like a plus.
Oh, wow.
So you need to pay a lot of attention. Plus there are compliance considerations. That was honestly very, very interesting in Southeast Asia, in which I mean, if you want to show a banknote, you need to send a fax, not an email, a fax to the central bank of one country. But you cannot show a pig, obviously, because it could be offensive to some religion. If you, I mean, it's a very intricate maze of regulation. And remember, we are a startup scale up. We don't have 1,000 people in compliance. We have like 2 people, and they need to handle 5 countries.
I was in a compliance meeting last week and talking about the need to bring close, build closer bridges between marketing and compliance, because ultimately both on the same team, both trying to achieve the same aims, but often they're seen as kind of going head to head in such a fast moving startup growth trajectory like that. How does compliance and marketing work together? Is it going bashing head to head, or do you find actually that kind of combined approach?
I smile because I think for a CMO, the two best friends in a company are the chief compliance officer and the chief financial officer.
Right.
And if they are your friends, then the friendship with the CEO is much easier.
Okay.
So I was lucky to honestly have a great chief compliance officer close to me in my experience in Asia and now in Europe. I think it's just at the end of the day a matter of relationship.
Yeah.
You need to put in this bank of trust little deposit, because at some point you will make a withdrawal.
Yeah.
And that withdrawal will be huge, usually.
Yeah.
So the way in which I navigate this is through personal relationship with these with the compliance people.
Mm-hmm.
And the fact that at the end of the day, we are there, marketing and compliance, to do something for the greater good of the customer. Especially if you work in a WealthTech player that has a positioning around better and improved cost efficiency, getting the best value for your money. This is absolutely aligning with the customer interest. We are not there selling complex derivatives and trying to make them up and dress them up as something easy just to make up more fees. We are there to say you need to stay invested. You need to stay invested for the long time. You need to start investing yesterday. All the normal thing that you will say, that a financial advisor will say to you. So compliance helps us deliver that message through a digital medium, through a smartphone, through an automated one-to-many type of instrument. So if we are aligned on that, we can work out solution. I have several examples in my mind in which the first answer is always, we cannot do that. Then you sit down and you make it happen.
Yeah.
Because at the end, what your outcome is a better situation, a better net better situation for your customer.
Yeah.
And at the end of the day, this is what we want. Also, the regulator exists in order to do that. So
have a conversation. You understand from what how the situation looks from their perspective. They see it from yours. Together, you remove each other's blind spot, and you end up with a better solution overall.
This campaign, this wording, this disclaimer text, is it improving the outcome for the customer? If it is yes, then let's discuss better if that word is not the perfect one, the font size, because probably there is a way to make this happen.
Yes, yeah.
And but if you start to say, don't do that because compliance will never apply, then you start to go down a slippery slope of not good collaboration.
Yeah, that's interesting hearing how you work with compliance and I love that advice about coming at it from the customer's perspective as the starting point for that discussion. It creates a very level playing field, and I think that's definitely something I can take away as a learning point.
Also, because if I may say so, in a young and small, if you want, for the traditional banking industry size, WealthTech, you are not too big to fail.
Yes.
So you are, as I usually say to my colleague, you are small enough to be killed as an example. Right. So it's not like nobody's going to save us.
Yeah.
So the moment you do something wrong, you will have the spotlight there.
Mm-hmm.
This is why you should not trust WealthTech. Our CAC and lifetime value equation is built on trust.
Yeah.
So you need to be 10 times more, pay 10 times more attention than what other competitors do.
Yeah.
And I can tell you, in the company in which I've been, we were quite often wondering, but why other people can do that? Why they go out with this ad on television, on the tube, and why we cannot do that? We cannot, because if you read the regulation, it is clear that you cannot do that.
Right.
And so we need to be very, very careful.
On top of your game. I'm interested in how within your role as CMO that you also work with the CEO and the CFO on a strategic the growth of the business, especially when it comes down into either entering into new markets or developing out new products? Is there anything you could expand on there?
Obviously, the marketing line in the P&L is a significant one. So the shift from being a cost center to being considered an investment is a mental shift that is not to be taken for granted. With the CFO, the collaboration is all around agreeing on a framework to measure output and efficiency and efficacy of the marketing budget. Because obviously, if you go out with something that is more brand awareness and less direct response, it's simply stupid to then measure a direct response metric on that budget. And the vice versa is true. So in my experience, marketing budget is the first victim of any cut. Rightfully so, I would say, especially in companies like the one in which I work in the last few years that are very, very product focused. Right. So if you wonder, should I spend 100K more on this campaign or 100K more to accelerate product delivery, you will spend 100K more to accelerate product delivery.
Sure.
So first of all, agree on the framework with the CFO. Agree on the fact that your definition of success is shared. And then with this framework in place, you go to the CEO. And you try to establish a partnership about that. I have read somewhere that the tenure of the CMO is one of the shortest around the C-suite. Yes. Doesn't surprise me. Yeah. But I
think it's sort of like 3 to 5 years. Is that right?
I don't remember. There was a very interesting McKinsey article about this.
Yeah.
And I think most of these short tenure curse is due to some misalignment of expectation with the overall C-suite and ExCo members.
Yes.
Because probably the mandate and the scope of the CMO is not so clear. Is this a product guy? Is this a commercial guy? Is this a brand positioning guy? Yes, probably is, but he's more a chief growth officer, is more a chief marketing officer, is more a chief brand officer. It's the boundaries are not so well defined compared to a chief operating officer or a chief financial officer, at least in a startup scale.
Yeah. I'm interested in how you approach marketing effectiveness, whether that's a Moneyfarm or Stashaway, and interested to understand how you're, I guess, held to account, but also how you hold your team to account as well, and what you're looking for within the effectiveness of the work that you do.
So I think in the WealthTech, wealth management world, this is a very tricky question to answer, because if you only focus on outputs, so at the end of the day, which is your CAC? No, that's the first question the CEO will always ask you. I was in a meeting half an hour ago and it was all around CAC and customer acquisition cost, payback time, lifetime value. Okay, fantastic. But the problem is that in our industry, there is an influence from the markets and where the SP 500 is and where the central bank interest rate decision are,
right,
that incredibly influences what you do.
Yeah.
So if you focus only on output, you risk that when you do everything well, but the market is not going towards your direction, you wrongly think that what you are doing is wrong.
I see.
And when you are doing wrong things, but the market is helping you, you assume you are a genius.
Yeah.
So probably you are not a genius and not a moron, but the reality is always in the middle. So if you focus on inputs and try to do small improvements, channel by channel, test and iterate, and incremental improvement in which the incrementality factor can be really statistically measured, I think you are on the right way.
Okay.
But you need to be aware that in this industry, the market drives a lot.
Yes.
And you are sitting on this elephant, and if the elephant goes up, you go up with him, and down with him.
Yeah, yeah.
And we don't need another Warren Buffett sentence to say that. But
sure. Yeah, he makes sense. It's
he explained that in a very clear way.
Yeah, yes, yeah. But no, that makes perfect sense. And any difference in out of interest, as we've been talking about the way that things are slightly different across from Europe to Asia, any difference in the way that you ran operations?
So given the European market is, in my opinion, much more mature than what I saw in Southeast Asia, you need a seniority when it comes to agency that was not needed, honestly, when in the countries in which I opened during my tenure in Southeast Asia.
Okay.
So as I told you in the beginning, I terminated the contract with the agency there. Here is the exact opposite. I immediately recognized the need of very senior help on a few topics that internally I could not deliver.
Yeah.
And it would also probably be stupid to deliver that type of skill set internally. You buy it when you need it.
Yes.
So that for sure was different. The attitude towards money, honestly, I think is universal. When it comes to money, people have super strong emotion. When the market goes up, there is this greed, everybody's becoming rich, I want to be part of it, and they buy when the market is at the top. And then when the market goes down, there is fear, there is, oh my God, we are losing everything, let me sell everything when the market is at the bottom. So they do exactly the opposite of what they should know. They buy high and sell low. So my job in that case is the same in both continents. My job is help people cope with their emotion. That is my job.
Yeah.
We do that across an holistic strategy, a multi-channel strategy, but at the end of the day, you tell them, listen, don't follow this emotional roller coaster. Stick to dollar cost averaging, stick to what is the best for you, because this should be boring. And again, Warren Buffett said it very well, but let's not mention him too much. As boring as watching paints get dry. No? So, so the job, I think, of a CMO working in WealthTech, beside positioning a brand, getting a product to market, crafting compelling narratives for one-to-one, one-to-many. But at the end of the day, is helping your customer base handle well their emotion.
Yes, yeah.
And it could be an unconscious and conscious conversation that you deliver in a holistic way across multiple touch points. So the complexity is orchestrating this thing in the midst of a complex startup scale up where the strategy changes very fast and things go right, then go left, then go up and down.
But that sounds like that's the constant drumbeat that is always behind everything about that educating the
and it drives many of your decision. The fact that you go and advertise on television, why you do that in that specific channel, in that specific inventory. Because the big guys do the same, because the big banks do the same. So you go there, so you inherit trust simply by sharing the same, by visually anchoring to the same spot, no? You go on the tube and you want that spot, because that spot is usually taken by the big guys, because people will resonate with that.
I see.
So can you measure the brand recall? Yeah, you can. Can you measure the direct conversion and activation? No, probably not. You cannot, but doesn't matter. Because you are contributing to the brand position in terms of trust.
Yes, yeah. I guess there are certain things that, depending on how you execute on that there are like, thinking back to your incremental improvements that you're so for example, if you created a number of pieces of content, educational content around video, you can measure overall watch time, for example, and if you can see an incremental improvement on that is evidence that things are going in the right direction.
So absolutely yes, but maybe one step further. Let's assume that all those videos were around diversification.
Yeah.
And then you are able to match that with the fact that people on average have more than one product with you in the same time span.
Fantastic, yeah.
Okay, so then my video and my content strategy all around diversification produced measurable results.
Yeah.
Is this linked to asset under management going up? Difficult to say. Because if the same time the SP was going to the moon, yes. Otherwise, no.
Yeah.
Because I told you, people behave in that very emotional way.
Yes.
But still, I can remove some of these biases and really measure something that I was able to move the needle there.
Yes, yeah.
And so maybe after 6 months all around diversification, I discovered that people have a more diversified portfolio of products with us. So goal achieved in a way.
Yeah. The subject of financial literacy, this is something that I sense that you feel very passionate about. And it's, again, with your experience across different geographic regions, is there anything you can tell us about?
Yes. So in Southeast Asia, I insisted a lot to have an academy. And I also invited the Wall Street Journal bestseller author, Nir Eyal, to be our spokesperson in this academy project, because he was speaking, he had 2 bestseller books all around how to be undistractable, how to be somebody that has a focus in what he decides to do and then he achieves. So think about that with your financial planning. That's a very relevant topic.
Yeah.
In Europe, I don't felt that need, because overall, I think even if financial education, unfortunately, is not on our high school curriculum, and it should be, honestly.
I agree.
But for sure, there is a greater scholarization on average. in which I don't know, a family budget or the fact that I should be properly insured if I have, I don't know, a wife with children or with my partner is more ingrained. So I don't feel that need. But overall, we have lots of people just with the mandate of producing very high quality, very engaging content. And honestly, when we publish our quarterly report, our strategic asset allocation view on the market, you could take our logo, swap it with one of the top tier one investment banks. And honestly, you will not notice the difference.
Right.
Because the quality is very, very high.
Yes, yeah. Let's, I guess, go back up slightly. I guess back to Moneyfarm, and again, this is essentially the second wealth management platform that you are scaling. What would you say are the lessons that you've learned and the experience about how you go for fast growth in this sense? And what would you be advising other marketers to do, not to do, based on the experience that you've gone through?
First of all, I guess is over communicate. Like repeat everything 3 times in 3 different ways on 3 different channels, in private message, on town hall. Over communicate
to your team and
internally.
Internally to the business.
Over communicate.
Yeah.
Craft a compelling vision where you want to go with your team, and just over communicate it in a way that you seem like a parrot repeating always the same 3 lines. Be extremely clear. It is either black or white. Don't speak gray. Just decide and then repeat it like a parrot everywhere. Because usually when you go from startup to scale up, there were some information asymmetries that were bridged simply by a water cooler conversation.
Right.
But several times, and this is my experience, but also what I read in several books, people don't make the mental jump. Now we are a scale up. What we used to do in 20, now there are 250 people across multiple countries.
Yeah.
So they assume information gets shared in the same way, in very informal way. The famous 2 pizza team of Jeff Bezos, that the moment you cannot feed the team with more than 2 pizza, you start to have inefficiencies.
Yeah.
And so how do you solve that? You over communicate.
Yes. Okay.
Also, because if you want to scale, you need to hire people.
Yeah.
But then you are people and you have a problem of information sharing and information asymmetries. So you over communicate. That will be my first thing.
Okay.
You should find yourself saying things time and time again in multiple ways.
Yes.
I also started here to have a recorded video message I send maybe in theory every week, but let's say every month on Friday, in which for 5 minutes I simply tell what is on my mind to the entire team. Then you do town hall, then you do one-on-one, then you do everything you can do to over communicate.
Yeah.
That's the first thing. Let's say that when there is a void of information, the human mind doesn't fill that void with positive things.
Right.
Okay.
Yeah.
Is fear, uncertainty, doubt, worries.
Imagining the worst.
Yes.
Yeah.
That is how we are wired. So you need to change that.
Yes.
The second thing is that my style is I try to use as much as possible motivation and going towards a better situation than running away from something bad.
Okay.
And in this sense, emotions are very contagious.
Yeah.
So I see the CMO as a very influential role from a leadership perspective.
Okay.
Because let's be honest, the people that reports to you and the people you choose yourself to surround with will know much better than you the technical details of that network, that campaign, that way of delivering the message. So you, or at least this is how I interpret my profession, is you are a very well-trained coach to allow them to do their best.
Yeah.
And so if you approach this with a positive emotion, enthusiastic emotion, this is a nice way to deliver your to reach cultural alignment. And when you have cultural alignment, if you have hired well, things happen by themselves.
Yeah.
If you have hired poorly, then you have another issue.
Yeah.
But if you have hired well, then things happen by themselves, provided there is the right context.
Yeah.
Over communicate and cultivate emotion that promote action.
And trust the team.
Yeah, and obviously maybe is a third minor point. You should have hired well.
Yeah.
Humble people that are willing to learn, people that understand that they work in a startup to scale up. So the proverbial thing hits the fan.
Yes.
Often. and then it's a roller coaster thing. This is not corporate. So
No.
people should have a very clear mind that they have joined a startup scale up.
Yes.
If they expect something very glamorous or very corporate,
It's not that. No.
you are going to be disillusioned.
Presumably that would have come out within the recruitment process, hopefully. Hopefully.
Hopefully.
Yes.
Let's be optimistic.
We're in a very volatile market at the moment, and customers' attitudes, preferences may be not quite what they were this year for what they have been over the last few years, maybe. How do you manage in your role again, maintaining growth in that challenging, volatile time?
Everybody now wants the yield.
Yeah.
Just give me the number, tell me it's fixed, tell me it's guaranteed, but just give me the number.
Yeah.
Don't tell me there is a 60-40 portfolio that 20 years down the road will do well for my future self and my children and whatever. This is it. This is the reality right now, and you can see the biggest player. If you go on the homepage of the biggest WealthTech, let's call with the word I don't like to use, but the biggest robo-advisor in the US and everywhere in the world, all their homepage has been now is completely changed. They only speak about I give you X% guarantee. If you went 2 years ago, it was just 100% equity. Just stay here and don't worry. The market will do its own job.
Sure.
So you need to adapt to customer preference for sure. That means that the product team will be put under immense pressure to be sure that you have a wide enough product offering to satisfy a completely different set of customer needs, because during COVID and with a very different central bank policy on interest rates, the needs were completely different. Everybody was a genius of equity investing and risk on everywhere, animal spirit. And now everybody wants a money market fund. And just a guarantee, just give me the bond, just government bonds. Italian will love that. And they have loved that if you see the latest emission. So you need to be sure you have a product team that is capable to resist under immense pressure, because this is where lots of pressure will go. And maybe if you are clever enough to build tools that allow you to serve different needs when the market changes, and I will explain myself better, a brokerage, execution-only capabilities. That, for example, will allow you to serve bonds if there is now the flavor of the bond, but also something that is, ETF linked to a specific team, if the world is switching to that team. So it's not easy. It's not just a marketing job. And the more leeway the platform gives to you, the more you are capable of driving and riding these customer preferences. But, an important but, let's be mindful that our job at the end of the day is to act in the best interest of our customer. And so who am I to tell them that they should forget about building a position in a well-diversified portfolio in this period, even if it is not top of their mind? Probably I should not neglect that, because probably now is the time to think about building a position for the long term. It's not financial advice, but
it goes back to the education.
Yes. Who am I to ignore the fact that even if everybody wants a yield right now, maybe there is a merit in building a position maybe on things that looks much less attractive. Again, let's not commit the same error to buy high and sell low. Let's try to position ourselves in a counter trend way to be ready to then get the best of both. And there are tools that allow you to do that. And this, by the way, is something in Moneyfarm we are developing right now as we speak.
And I guess a lot of that is about the speed that you can develop products to market. Again, it dictates that speed will be driven by the type of company you are, but also by the size of company you are, how well resourced you are as a company, and that's going to enable you to be agile. But I would always think that startups and scale ups are inherently more agile than.
I mean, obviously, we play the game of leveraging as much as possible the lack of IT legacy nightmares. That obviously is the plug of every big financial institution. But even as the WealthTech world, start to have legacy issues.
Because of the speed of technological development.
Yes, and also because you start 5 years ago thinking that that platform would be capable of handling whatever load, and then you go 10x in user and say, you know what, we need a complete refactoring. We need to stop every product development for 6 months.
Yeah.
Okay.
Yeah.
But you probably could not afford that.
No.
So yeah, maybe the traditional player goes slow, we go much, much faster, but we tend to be also slower than other players. And so from there is an entire new chapter to think about open finance platform in which with APIs, you maybe rethink what was called the robo advisor.
Yeah.
And maybe 10 years from now, the shape of the industry will be completely different than what we have right now due to open finance, due to traditional banks that move towards a more outcome-focused job, what is called a platform economy. And then you have big tech entering the space.
Right.
Look at Apple with Goldman Sachs, look at buy now, pay later. I mean, that opens up an entirely different world that is very far from WealthTech.
Yes.
Because you go into payments, etc., etc. But then don't think that those transactions are a prerequisite only of big banks. They could be the Amazon, the Apple. They can be there in a second.
Yeah. You mentioned there about acquisition, and I know I preparing for our interview, I read recently about the acquisition of Profile Pensions, and what role, again from your position, do you play in the acquisitions and presumably the activity that happens after the acquisition?
Yes. So marketing comes, at least in my experience, comes later at the table when things from a strategic balance sheet and financing perspective are already been ironed out by the CEO, by the chief strategy, chief operation officer, by the people more closely involved with funding decision and terms and condition of those deals. Then when there is the wet signature, hopefully very fast marketing starts to be engaged because the risk is then to engage it too late on in the process.
Yeah.
Because then you have in such a small company issue of a very big corporation, because you have M&A issues, you have merging brands, merging culture of employees. Okay, maybe there are only 50 employees and 200 on the other side, not 10,000 and 50,000. But still it's not like we are all expert in merger and acquisition. And so you have internal challenges, you have communication challenges, you have two brands, they need to become one. You have new distribution channels, B2B2C distribution channels. In Moneyfarm, it has been done in the past with Poste Italiane in Italy. It has been done with M&G in the UK. And now it has been recently done with Profile Pension. So it's a very active company from a M&A type of growth, M&A driven growth. And for me in my career, this is also honestly the first time I see this spanning out, because first I have my own company, which, I mean, the last thing was in our mind was growing through M&A with entirely self-financed. Then in Singapore, it was not feasible in the same way. But again, given the maturity of the landscape here in the UK and in Italy is different, then it becomes possible. So marketing comes last, and it has all the internal work stream to merge everything properly, and external, two brands, one brand only, where there are the synergies. Which channel can we incorporate under the same team? Which channel makes sense to abandon? Will the new customer be able to mature well from a cross-selling perspective or not? Who knows? There was done assumption when the deal was signed and the due diligence was carried out, but
then the reality bites.
Then the reality kicks in.
Yeah. One of the things that we spoke about offline was the rise of the female investor. And this is, and I know that this is something that you've looked into, and I wanted to speak about this. For me, I wondered, is this a new marketing thing that we've just discovered, or really is the reality actually female investors have been around a long time?
No, this is a super important topic, and here maybe I can make you some comparison between Southeast Asia and Europe, because in Southeast Asia, this gender investing gap was a big thing for us. Apart from having a very diverse C-suite, we felt that it was absolutely misrepresented and something had to be done.
Misrepresented in terms of marketing communications, or misrepresented it
in the sense that
in the actual physical data?
No, in the sense that the female investor population was not receiving enough attention from traditional financial players.
Got it.
With product tailored for them, with communication that leverages some of the unique life stages, etc., etc.
Okay.
So it was not well represented.
Yeah.
And so we did a series of initiatives. And I can tell you, because since we are so backed by data and customer insight and customer insights, we have measured everything. And after a while, it was clear that on average, our female customer back then in Southeast Asia were, after they have chosen a specific risk profile of their portfolio, they were able to change the risk profile at much less frequently than their male counterpart.
Okay.
Why? I don't know. In the sense, it's a matter of attitude towards investing. But once they felt that that was their risk attitude, that was it.
Okay.
And obviously, this has huge benefit from a performance perspective, because if you start to
you're not chopping and changing.
Yes, exactly.
Yeah.
So that was something proved from a statistically significant way. What we discovered here in the UK and Italy, and we published in Moneyfarm a press release in March this year, is that we saw year over year, 2020 versus 2022, if I'm not mistaken, a huge increase of ISAs subscribed by female investor.
Okay.
Huge increase, absolutely not comparable with the male counterpart. And on average, the ESG component of the female population was much, much higher.
Wow, fascinating.
And they were investing much more on ESG driven investment than non-ESG one. So
that insight is available still for.
Yes, it is in our one of our press release.
Right, fantastic. So if anyone's interested, in that,
March 2023 was published.
Fabulous. Yes. I guess the summary of that is that the money from female investors from a wealth platform perspective is very interesting, because it's stickier money.
At least their approach with the risk is more stable.
Okay.
So hopefully this rewards in the longer run with a lower churn.
I see. Okay. If we come back then, I guess, to marketing in general acting as a catalyst for Moneyfarm. You've recently gone through another round of funding at Moneyfarm. I imagine with that comes aggressive targets, performance targets to hit from a growth point of view. How are you approaching that, and how has that changed your I guess your tactics from a CMO perspective?
So the round was done last year in a very different economic environment from an interest rates perspective. So again, marketing budget is the first to accelerate, but also to reduce when needed.
Okay.
I think you need to be aware of the greater picture, and the greater picture in the specific of Moneyfarm was to bring this company from a single product provider for 10, 11 years of 12 years of existence to a multi-product provider.
Right.
So this is how we have developed from a marketing perspective our capabilities and resources, and this is what will be presented early next year.
Okay.
With a completely new branding and overall product offering and positioning.
I see.
So this is how
that's been the main focus.
Yes, this is how the money has been spent.
Okay.
Plus, we never stop experimentation, and we have developed and taken to market many different products. I mean, what we have done in the last 6 months was probably not done in the last 11 years.
Oh, wow.
Yes.
It's been a busy time. And the brand work has happened or is happening?
Will be revealed very soon.
Okay. Nothing more we can say about that.
The idea is that obviously there is a much wider product offering.
Yeah.
And when you think about Moneyfarm, you think about a wealth player, a total wealth player for all of your needs.
Yes, yeah.
All delivered through an app, all with this cost transparency and especially in Italy, independence, as I was saying before, that maybe in UK is taken for granted, but in the Italian market, not for sure. and with a top asset allocation team, etc., etc.
That's something for us to keep an eye on, Moneyfarm.
Yes,
seeing
soon.
what comes next. So just start thinking about wrapping this up and thinking about what it sounds like you've had a very busy 6 months, I have to say. But from your perspective, how you see the markets, what they have been and what we hope they may be coming into over the next year and subsequent years after that. From the position of WealthTech, where do you see the trends going, and where are you seeing your kind of shift of focus starting to consider when you're starting to consider what the next couple of years looks like?
In my industry, I think it's very difficult to make prediction that go more than the next quarter.
Oh, right.
In the sense, if you remember back in the summer, no, let's wait for the end of the year when interest rates have peaked for sure. Now, I mean, let's wait till another 6 months. It's very, very complex.
Yeah.
I think we need to have a
back to that elephant going up or down.
Yes, exactly. Yeah. Because again, then you focus on output, and then honestly, your self-efficacy is reduced because I do well, I do badly, but then it's not depending on me. No, this is not the attitude.
No.
So I think you need to be well positioned with a wide product offering that captures all the different customer preferences that for sure now are not on the pure equity portfolio, for sure. They are elsewhere, and so you need to be able to capture them. And this is something that several players are doing. And I don't think the efficient use of money will never stop to be like that, in the sense that capital is not easy and expensive, because the VC funding rounds are not done at the same valuation of 2 years ago, 3 years ago.
No.
During COVID, it was insane. And those multipliers are not there anymore.
No.
So capital costs and capital could be expensive to raise in this moment, because you risk a down round, you risk dilution, etc., etc. So either you rebrand yourself and you call yourself ChatGPT investment or something, and that would be a way to get a very, very high valuation. If you remember 3 years ago, everybody was calling themselves blockchain something, just to go after that.
Yeah.
But jokes apart, I think for wealth managers, it will be tough.
Yeah.
And there will be a very prudent use of money. I don't see people splurging like probably was done a few years ago.
No. So I guess thinking of the conversation we've had just now, I think if it would seem to me that the thing to do would be stick to the knitting, focus on what it is that you're actually trying to achieve, and look for that continuous incremental growth, so that regardless of the elephants going up or down, you're confident that the work that you are doing is contributing to the ultimate trajectory of the business.
Yes, and it's always up to the right. Also because we are not a bank.
Yeah.
So it's not like a business on stock. Now you have a stock of money. Just for keeping the money there, you make money.
Yeah.
It's completely different in our case. You are not there. You need to reach that stage, maybe 20 years down the road. So it's just growing every day, day after day. It's not protecting, it's acquiring.
Yes, yeah.
And nowadays we fight against governments because people will love the new bond, no? Government bond. So very, very complex.
Yeah. Thank you so much, Filippo, for
My
coming,
pleasure.
joining and sharing so much insight from your time both in Asia and also now straddling across Italy and the UK. So thank you very much.
My pleasure. Thank you so much.
Thank you. And thank you for listening today to The Growth Engine. If you enjoyed this episode and like to hear more, please do subscribe wherever you get podcasts from, and follow us on LinkedIn for regular updates or on hubagency.co.uk. Thank you, and see you next time.